how to start crushing in the crypto markets and become consistently profitable within just 30 days. Now, I know what you're thinking. Yeah, right, sounds too good to be true. But hear me out, because I've been exactly where you are. I'm self-taught and made every amateur mistake in the book when I was starting out, which cost me a crazy amount of money and years of my life wasted spinning my wheels. Whether you have some experience or are a complete beginner, this video will provide a boiled down checklist of the most crucial things you need to focus on to set up yourself for success. We'll cover trading software, tools, custom spreadsheets, accessing capital with a small amount of money to take sizable positions. By the end, you will have a clear path to start your trading career without wasting unnecessary time and money. If that sounds good, hit the like button and subscribe to my channel. To revamp your trading, we first need to identify and avoid a common trap that halts progress and puts beginners into what I call the doom cycle. When people first start trading, they typically get onto an exchange, find a pattern online and start trading it. Initially, because they don't understand implied risk, they can be braver than most and may make money off the jump, thinking, wow, I'm really good at this, I should continue with more money. The next phase comes when a position goes dramatically against them. They think, I'm down a lot of money, I can't sell because I don't want to take a loss. So they wait for the position to come back, take some profit at their entry and reinforce the idea that they just need to wait out losing positions. They carry this psychology forward until phase 3, the catastrophic loss. Here, the position goes against them, they deploy the same tactic of holding, but the trade doesn't turn around, and the loss is so significant that they are forced to take a huge chunk out of their account. This is where beginners enter the discovery phase, thinking they need to acquire all sorts of new information. However, if you don't understand trading and fall into this trap, it's very hard to recover without rewiring your mindset. The intuition that makes you successful in normal life will actually make you the worst trader, which is why roughly 90% of traders fail, because they can't rewire their mindset. Let's get into the simple math behind trading. It comes down to two basic stats: average risk reward and average winning percentage. How many times are you winning trades versus losing trades? How much money are you making on winning trades versus how much you're risking? That's your risk reward calculation. Let's use a calculator to see this concept in action and then look at it on chart. Say we have a $500 account and are risking 2% per trade with a 1 to 2.5 risk reward ratio. If we risk $10 on a trade, we make 25 when we win. Let's say our winning percentage is 35%, which is low. But as you will see, it doesn't matter much. Starting with a $500 account over 100 trades, with these statistics of being wrong 65% of the time, we've increased our account by 37%. This is why you need to understand these stats. It has nothing to do with being right all the time, but rather the math behind it. To understand risk factors, let's say we want to take a position in the market at this level. If we are wrong and the market continues pushing down to this level, that's our 1 unit of risk. If the trade hits this level, we'll have a $30 profit if we risk 10. That's what we mean by risk reward. If we know this can happen 35% of the time, we can be wrong 65% of the time and still grow our account by 37%. We are wired from childhood to believe being wrong and losing money are behaviors that need correcting. If you become a better trader with a 50% win rate, look at the profit potential, even on a small account. I always emphasize that it's about generating a consistent process with a small amount of money. With a $500 account, using leverage, we can easily access $50,000 starting with a $500 account. This is the exact concept I deploy when making $2,000 to $4,000 on each trade. It's about mastering a small process and then scaling it with larger numbers. Let's go over finding a setup where we think the market will make a move. The software I'm using is TradingView, link in the description if you're not already using it. There are areas on the chart where I can identify probable market reversals, allowing me to use that risk reward and winning percentage map to put myself in a high probability situation for the reward I want. Here I'm using Bollinger Bands and RSI to find my entry. I enter a long trade at the bottom of the Bollinger Band and only if RSI is below 30. The next crucial step is testing your system and inputting the criteria onto a backtesting sheet to study your information. See what's working and what's not, and analyze your performance as a trader. Once you have a pattern you're trying to trade and a system to test, make sure you take your time to backtest it. take screenshots and see what your results would be over 30, 40 theoretical trades. That way you are not wasting time or money and you will know exactly where you stand very quickly. The beauty of backtesting is that you can tweak how you approach these trades and not do certain things to increase your winning percentage. If you can go from 50 to a 65% win rate, you can make a significant amount of money. In this instance, it's about a 97,000 gain in 100 trades. Doing this entire process will save you time, money, and allow you to get where you need without getting confused and falling into traps. And if you want to know a little bit more about one of my strategies that I use on a regular basis, make sure to watch this video.